With all that said, what do we make of the market reaction today? We had the typical bid for gold. We had the atypical lack of bid for treasuries, and the markets hung in until Iran retaliated.
Yeah, and it's amazing because a couple days ago, it was like, whoa, the VIX is grinding below. We're about to go south of 16. Now we're dancing up near 20. And if you think about, right, those inputs, I mean, the rallying gold, so gold makes a fresh all-time high or right there around the May 6th highs, and it's something that I think will continue to trade higher independent of what goes on in the Middle East. That's, to me, the nice thing about the gold trade. For markets overall, again, we're doing this after a V-shaped recovery in the S&P. I think fundamentals around what the impact of this are still very unknown, even though I think for the most part, the market will be largely sanguine. Now, if you ask most people at the start of this year where they thought the greatest risks to the market were, geopolitical risks, whether a handful of global hotspots were part of where I think more people were concerned, especially before we got into the tariff dynamics. So, the Middle East has been on our radar, and obviously Iran and Israel were trading volleys back in October. So, and back to the oil market, look, I think you asked me yesterday or the day before, what do you think about the spike in oil prices here? And I said, no one ever responds to a bid from oil disruption, from hurricanes or war. And I think for the most part, that's actually true. But I do think that the dynamic here, so while it doesn't change the fundamentals around oil, there's no question, one, you're not going to go short on oil into the weekend. The reaction of traders here makes a ton of sense. I still think that the fundamentals, which include supply surplus, which is all we've heard about for the last 3 months, is still the more important part of this trade. But no question, higher energy prices for Europe and for the rest of the world, especially, I think are a big, headwind for a fragile economy.
I actually think, so the response to the events, okay, we understand that, but I actually think oil was poised to turn around anyway. It was, ready. I think that if you were short, it had been played out pretty much already. So I don't know where we'll go if tensions ease. I think it'll come back some, but I don't think it will come back all the way. I think we're just headed into an uptrend for oil. And I don't know if that's because, for one, weaker dollar. We were talking about that on the call today, weaker dollar, higher
Definitely
oil.
Helps oil.
Right. But also maybe it's that, are we, for the U.S. anyway, do we get a big, beautiful bill? Does that, and deregulation, and does that get the economy humming? And what does that mean for oil demand? And a lot of things that go along with that. So I think the bottom's in regardless of how this plays out.
Yeah, and I think the big question is, what is this going to do to inflation? And I think that's what markets, and really the Treasury market, is trying to sniff out today, because there was this thought that, yes, tariffs may be inflationary, but lower oil could actually offset some of that. But now if you see oil prices going up and we have tariffs kick in, this is going to change the inflation story. And so that's where we've started to see inflation coming down. You actually just saw consumer sentiment numbers, and inflation expectations just came down, though that was a past reading. So I don't know how much that changes after today. That's really, I think, where the bigger picture is this a shorter event? This doesn't escalate into something larger. Oil prices don't go higher from here. This could be a non-event. If it does escalate into something higher and oil prices stay higher, that can just put a lot of pressure on inflation.